Hello friends, welcome to Business Learnings. This video is about the recent set of decisions made by RBI, and we'll also talk about its impact. We'll try to understand them, and if you want to get the most education out of this video, please watch this video till the end. Okay. First, we'll talk about the reverse repo rate and repo rate decisions. Okay. So repo rate is held constant at 4.4%. See, every bank can raise money from RBI, and RBI gives loans to these banks at a rate which is called repo rate. Okay. Now banks cannot lend out all the money, especially in these kind of situations when banks think that there are not good enough borrowers available in the market. They are left with a lot of capital, and since a sitting capital is not earning any interest, a bank can place this capital with RBI and in return it can earn some interest, and that is called reverse repo rate. So RBI has cut the reverse repo rate, which means RBI does not want banks to deposit their money with RBI. It wants banks to give loans to people, to people in need, to businesses in need, and that's how you can prevent a financial crisis, right? This is a positive news for a lot of banks, because instead of losing interest on parking money with RBI, they now stand a chance to gain a decent net interest margin. Remember, banks give out retail loans upwards of 10-15%. Imagine getting a return of 15% versus getting a return of just 3.75%. Who's the winner here? Okay. Second thing is the TLTRO, okay, targeted long-term repo operations. So about 2-3 weeks ago, 1 lakh crore capital was committed for this, and banks lend out all this capital to large institutions, large NBFCs, good quality corporate NBFCs, good quality firms, big firms. But in these situations, in these kinds of times, a lot of institutions which have their huge size, they are doing fantastically well as compared to the institutions which are small NBFCs, microfinance institutions, small finance institutions. They are struggling a lot in these times, and they need the most capital, and that's why RBI has declared TLTRO 2.0, where 50,000 crore of capital is promised. Now, out of this 50,000 crore of capital, 50% have to be given out to small finance banks, small NBFCs, microfinance institutions, and all. So this really helps the money reach the grassroots level of people who actually are in the dire need of money. Okay. So a positive news based on the consumption side. This may drive some consumption because now loans are available. Remember, banks are reluctant to give loans to people who have a small base, because they are more likely to default. Now RBI has also promised to grant 50,000 to SIDBI, NABARD, and NHB, and again, these institutions, they reach to the grassroots level. They have rural penetration, and again, consumption at the rural side is expected to grow based on these steps. So a positive news for the economy, and the good thing is that RBI has promised that it will continue taking on these kinds of steps in future if there is a need to do so. So government is listening, RBI is listening, and there is no need to worry about that. Okay, we talked about all these things. Now another positive news about the banking sector is that RBI has increased the NPA recognition duration from 3 months to 6 months. So NPA is a non-performing asset. If a borrower does not pay its interest, its EMI for 90 days, for a quarter, then it is classified as a non-performing asset. since the lockdown, a lot of people, a lot of institutions, a lot of borrowers will have difficulties paying their EMIs, and RBI has granted them a delay as well. But for a bank, you still have to identify them as NPAs, but not now, not today, because RBI has extended this duration to 6 months, which means the provisions, though provisions could increase because of the lockdown, but the NPAs are not going to increase for the next couple of months, for at least for this quarter and the next quarter. And this is a very positive news for banks, and this is probably the biggest driver of the increase in prices of a lot of banks that we saw yesterday. Okay, so yes, I think we talked about a lot of, in fact, all the factors that were responsible for a good result in the banking stocks, for a good performance of banking stocks yesterday. Next question: is that rally going to sustain? Honestly saying, I do not know that. No one can predict it with a decent bit of certainty. But I can tell you one thing for sure, that these valuations are way cheaper, and you should accumulate as much as you can. Keep accumulating, keep waiting for the stocks to fall. No one knows whether it will be a V-shape recovery or a U-shape or W-shape, or what kind of recovery will it be, but there will be a recovery in the long term. That's we know for sure, because markets have always recovered in the past. That's why in these times you should just build your portfolio. You should just add quality stocks and keep on earning returns. So thanks a lot. If you have been watching this far, please subscribe to support my channel. Hope you enjoyed the video. Bye.